Binance Futures is preparing to launch a USD-margined SLXUSDT perpetual contract, expanding its derivatives lineup with a new trading pair tied to the Solstice SLX token. This move introduces a leveraged vehicle for traders who want exposure to SLX's price movements without needing to hold the token itself. The contract will be margined in USDT, meaning traders will use Tether as collateral rather than the underlying asset. This format is common on Binance Futures and is designed to streamline trading for users who prefer to manage their positions in stablecoins. The listing was revealed through Binance's official announcements page, a standard channel for the exchange to disclose new futures products ahead of activation. The SLXUSDT perpetual contract allows traders to open long or short positions with no expiry date, settling profits and losses in USDT. This structure simplifies portfolio management for traders who prefer to hold stablecoin balances across multiple positions. The choice of a USDT margin format aligns with Binance Futures' broader product catalog, where the majority of perpetual contracts use the same collateral model. For SLX holders and traders, the listing provides a new venue for leveraged exposure to the token's price movements. The announcement follows Binance's recent alpha trading competition for Solstice SLX, which offered $200,000 in rewards, signaling growing exchange-level interest in the token ahead of the futures listing. New perpetual contract listings on major exchanges typically attract short-term volume as traders position around the initial price discovery period. The availability of leverage amplifies both. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Interest and risk during these early sessions. Contract specifications, including maximum leverage, tick size, and funding rate intervals, will shape the actual trading dynamics once Binance publishes the full product details. Traders typically monitor these parameters closely before committing. The listing of SLXUSDT futures could influence the token's liquidity and price behavior, especially during the initial trading period when market participants adjust to the new instrument. While the exact leverage and funding rate parameters have not yet been disclosed, the presence of a futures contract often correlates with increased short-term volatility. Traders will be watching how the market reacts to the contract's activation, particularly during the first few trading sessions when positioning activity is typically high. The token's price may experience increased exposure to leveraged positions, which can lead to more pronounced price swings. The recent alpha competition also suggests that Binance is actively promoting SLX to a broader audience, potentially increasing its visibility and trading activity. As with any new futures listing, the market will assess whether the contract attracts consistent volume and whether it becomes a meaningful contributor to the token's price action. The next key signal to watch is the official launch date and the initial trading dynamics that follow. Traders will be monitoring the first day's open interest and funding rate movements to gauge market sentiment and positioning behavior. The contract's success will depend on how it integrates into the broader SLX market structure and whether it attracts a diverse range of participants. The mechanism of a perpetual contract allows for continuous trading without expiration, which can lead to sustained interest as long as the underlying asset remains relevant. The stakes for traders are clear. Leverage can magnify gains, but also increase the risk of liquidation if positions move against them. The funding rate, which is used to settle the perpetual contract's price relative to the spot market, will be a key indicator of market sentiment. If longs dominate, the funding rate will be positive, pushing short-term prices higher. Conversely, if shorts are more active, the funding rate will be negative, potentially dragging the price down. The next signal traders will look for is the activation of the contract and the initial open interest figures. These will indicate most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Whether the market is bullish or bearish on SLX at the time of launch. If open interest rises sharply, it may signal strong positioning in either direction. Traders will also be watching for any sudden price spikes or dips that could be attributed to the new contract's influence. In summary, the introduction of the SLXUSDT perpetual contract on Binance Futures is a significant development for traders interested in Solstice. It offers a new way to trade the token with leverage, using stablecoin collateral. The listing follows a recent promotional event and could lead to increased liquidity and volatility. The success of the contract will depend on how it is adopted by the market and whether it becomes a key driver of SLX's price movements.